Yeah, I want to check one thing. Amazon Cloud, is it using the same cloud for AI? Is it the same cloud?
There's only one cloud, I think. The AI capabilities is in-house lah. So meaning when you tap onto their platform, you decide what kind of modules or what kind of things you want to use lah. And then if you want the AI capability, they just... Okay, welcome back to another episode of the Backholder Pod. So I think just a great earnings season that went by. Some companies did extremely well after hours. Some companies didn't do very well. So I think just to kind of preface the discussion here, the biggest Amazon bull together with us today is Boon Tee. So we will give him a lot of airtime today to make his case on why he has such a huge allocation to Amazon. I think specifically, I'm not too sure, just to check, Kelvin, do you have a outstanding Amazon position now?
I have a very small one.
A small one. Okay. Yeah. Then personally, I also have a very small one. So yeah, I think Amazon's earnings just ended. Maybe I'll just pass the floor over to Boon Tee to share his perspective and opinions on the recent earnings.
Wow. I got a nicer chart than yours.
This one is Amazon's one, right?
I got a nicer one.
Later I'll show charts, but for now, I just want to show that usually when Amazon result come up, right, I think this is the most important page. Although it looks like, wow, so many numbers and then how to see all these things, right? But I think this is the most important table that you should look at, because this is showing every quarter how much is the sales from each of the important segments, right? Basically, for Amazon business, for those who don't know, right, they have like two businesses. One is on the e-commerce, and then the other one is on their Amazon cloud services. Okay. Then in terms of the e-commerce, they break down into like two segments. One is North America, another one is international segment, and the AWS is shown here. So you can see that usually we just focus on how much growth that they are generating, year-over-year growth. And then what's their operating income for all this business, and then what's their margin and so on. So the important stuff are all here already. So over the last recent quarter, right, which is Q2 2023, right, you can see that first they in terms of their sales, they are doing okay, like 11%. But if you look at their operating incomes, right, it suddenly shoot up from 900 millions to 3.2 billions in a quarter. And for those who have been following Amazon for some time, you notice that actually they have been loss making for quite a number of quarters. Since like entire 2022, they are like losing money every quarter. To the extent that Q1 2022 that they lost $1.6 billion. Now just like shoot up to 3.2 billions, which is results that is very, I would say, very good. It exceed my expectation for sure. But it's just that this long drag of negative operating income periods is also longer than what I expected. I actually thought that they will cut costs sooner, but it dragged on for quite a number of quarters. Anyway, this quarter is still a positive surprise here. And then the international segment, you can see that, okay, growth, they are okay, like 10%. In terms of whether they are making money or not, actually, they are not making money. So, but the trend is moving to the, the improvement sides. Say, for example, Q3 2022, they lost like 2.5 billion and then improved to 1.25 billion last quarter. And then now the recent quarter is 0.9 billion. So this is... there's some improvement. I expect that they will turn positive, but maybe not like in 1 or 2 quarters. Probably need to wait another few more quarters to turn positive. And then lastly, AWS, people always say that the entire Amazons, right? Those who don't understand thought that they are e-commerce, but actually they are, like called the cloud companies. And this is the segments that is earning money for many, many quarters. Later, I will show you the chart so you can see clearer. In terms of their growth, actually they slowed down quite a fair bit from as high as like 37% previously, like 6 quarters ago, to now it's only like 12% growth. And then in terms of their margin wise, still doing okay. It's at about 24%, but also much lower than like 35% 1 or 2 years ago. So all in all, I would say e-commerce business has been doing quite well. I think all this thanks to the cost-cutting measures. For example, they lay off their employees, and then in terms of their logistic, also they do what they call the regionalizations, meaning that they actually do some improvement in terms of their logistics. They want cut down their costs a fair bit, and also I think all these energy prices came down, right? Also, it helped them because quite a huge proportions of their cost actually is used to pay out all these like fuel, basically transport costs lah. So this is one big part, and this is moving on a favorable direction. So I was just okay, this is just numbers, right? I'll just quickly show you the type of tracking that I did lah. So as I said, it's very hard to do like DCF, right? Because if you look at Amazon as just one companies, right, they are like, sometimes the positive operating income from AWS and then offset by negative operating income on the e-commerce. So when you sum up together, either you look at free cash flow or you look at operating incomes, they could be like negative. So that's make it harder to analyze. But if you break down their businesses into these three different segments, right? AWS, the e-commerce for North America and international, then you can see things like much clearer. I still remember Keng and I, like we had discussions on Amazon when the result was very bad. This is essentially the period where they have negative free cash flow, negative operating margin, and we are like asking, can this company actually start to make money, especially on their e-commerce, or is it like the e-commerce is always forever losing money kind of situations? So I think this quarter the companies just proved that yes, e-commerce, they are able to turn profits, and they are guiding that they are able to stay profitable over the next coming quarters. So I think that's a positive trend. But if you want to understand the business, I think sometimes it's worth to, like lengthen the horizon, right? Like not just looking at the past 1 to 2 years, but look at past, let's call it like 5-7 years to see whether they are able to make money or not. So I'll show you a couple of charts here, which I think is easier to interpret by just looking at chart. So again, come back, right? Amazon is still a growth companies. Whether the growth will sustain, whether it will go back up to 20 or 30%, I don't know. But this is a company that really focus on the growth of the business. As you can see here, this is the first chart, right? Is their revenue and breakdown by segment. The blue one is the AWS. The red one is their North America e-commerce. Yellow is their international e-commerce. You look at the trend, right? I mean, in 2014, there are like 20 billions per quarters kind of revenue, and going up now is in the range of like 130 billions. So there's a stable and decent growth rate, and they are able to sustain it for quite a number of years. In fact, I think they are one of the largest companies by revenue. I think the largest maybe is Walmart, but this one I need to check. But Amazon definitely is one of the largest. Then comes to the operating income. I think this is the interesting part. As you can see here, right, AWS, right, they have been operate at a positive income, operating income for some years. I think since 2014, they are already like positive. But it's the e-commerce business that is more volatile. Like period between, let's say, 2014 to, let's say, 2021, right? Their e-commerce business is actually profit making. But in 2022, they suddenly not able to make money. They are loss making. But the international e-commerce, I think they have been loss making except for a few quarters in 2020s. Then after that, they become loss making. But it's only the AWS that is more stable. But stable, they peak in around early 2022 and now going downhill since over the past few quarters. So you can see here, there's a lot of volatility in their business. Sometimes they are loss making, sometimes they are profitable. But I think this one really, you need to understand what's the situations that they are facing. For example, over the past, let's call it like 1 to 2 years, right? They built too much all this fulfilling network, and then they basically expand too fast. And after they expanded, they noticed that actually there's no such demand, and the demand actually is much lower than they expected. That's why all this capacity that they already built out and not utilized, right, it become like a drag in terms to their business results. So that's why they have been in this adjustment phase to improve the utilizations of all these assets, and then to close down some fulfilling centers and so on, just to right sizing the business so that they become more back to profitable. So we can see that there's some positive result in the recent quarter. Then few things to look at, right? I think this chart is showing the growth rate. I think many people actually bought into AWS, bought into Amazon also because of AWS. And AWS is always a business that is like high growth business, right? You can see that the blue line, right, which is the AWS year-over-year growth, they have been in the range of between, let's call it like 40% to 60% for some years. And then it has been trending down until around 2020. It's already at 30%. 30% is still decent. And then it re-accelerated during the COVID periods back to close to 40%. And the recent years, right, let's call it 2 to 3 years, right, we can see that this AWS segment has been going down like very fast. Now it is at 12% only. This is their growth rate. So to me, I would say this is quite worrying because it is like we don't know how much they can re-accelerate the growth again. And even if yes, right, whether it can go back to 20 or 30% or not, I myself is getting more skeptical now. So I'll explain more later. But the other segments, I would say that they are e-commerce not as high as AWS in the past, but you can say that it's average between, let's say, quite 10 to 15, maybe 10 to 20% range. And I think the recent numbers is about 10%, as you can see here. Then in terms of the margin, I would say AWS is the high margin business because of their first mover advantage, right? They have been generating about 25% margin, operating margin for many, many years. And now, even with some slowdown, we can see that it's still about 24% margin. Whereas for the e-commerce business, right, they are, like I said in the earlier charts, right, they are oscillating between like slightly positive or slightly negative. But all in all, average, I would say, is like low single digits positive returns now. This is margin. The rest is just to show that their business independently. I will go into all those details. I think this is a good general view in terms of their operating results. Later we'll go into more questions, and then I can share more on my view on the companies. I'll just stop here first. If not, become like solo talk again.
Kelvin, got any question?
Let me just show a bit of chart. This is so just now Boon Tee mentioned about the revenue breakdown part. This is a pie chart that lets you easier to understand. So if store is 50%, AWS is just a tiny part, 12% only. But as mentioned, AWS has the highest margin compared to the rest. So if you don't like to see financial statement, so this is the breakdown, minus off the expenses, all this, just a tiny 6.7 billion is the net profit. Yeah, so this is the nice looking chart. For me, I think that AWS has a higher chance of growing compared to the rest, just because it's an online thing, it's scalable because of this AI market thing. So some analysts did see that more than 30% compounded annual growth rate all the way till 2030. And I think AWS is in a good position to capture that growth. Not because they are on both sides now. They are the provider, they are providing the service to let you host AI stuff. And on the other hand, all their stuff, all of these, the online store, third-party seller service, AWS, all can start to use AI. So they are earning from both sides. But one thing is that the guy said that there's a demand, but they'll have to build more data centers and hardware before it translates to major financial payoff from the AI. So in other words, they are not there yet. They are not that ready for AI yet. So don't expect their profit to come anytime soon. In terms of cloud, right, AWS right now has the highest percentage, but the problem is they have been more or less stagnant in terms of market share, while Microsoft is slowly catching up. So we're going to drag it on for a few more years. Microsoft may take over Amazon in terms of cloud. So then my question to Boon Tee is where is Amazon's moat in terms of cloud?
So I'll say that first thing is that they are able to sustain as number one cloud providers for so many years. It's also because of their first mover advantage. So Amazon actually is the companies that started out this entire trend to move into cloud computing. So that's one. And then what is able to sustain that is actually the ecosystem. Because actually, if you fight with other companies, let's say by products, right? So it really depends on who has the better products, and your competitors can always come up with a product that's much better than you. But what is very hard to replace, right, is actually the ecosystem. What I mean by ecosystem is that now they are able to attract some companies onto their platforms, and then they attract more companies onto their platform. And then some of these companies, right, they are not just the users of all this hardware that they rent from Amazon's, right, which is this entire business model of cloud services, right. They are actually providing some like input as well. For example, they might be renting out or licensing out their data. And because of all this data is already on the same platforms, right? It's a lot easier for them to, like just license the data out, just do the sharing on the cloud. You don't even need to transfer the data over. Just a plug. Turn on the plugs, and then some companies can actually tap on the other sides of the cloud already. So I think all this, right, because of the services that is available on the ecosystems, right, it will make it more attractive for other players to come on board as well. So there's this network effects that's ongoing there. I'm not saying that because of this, then Microsoft or even like Google Clouds, right, they can't compete. Actually, I think all these big cloud companies, right, as long as you are in the top 3 or top 4, right, so they are all fine. They have their own strength. They have their own moat. They have their own focus. I think they are all going to do well. The question is always that, let's say the number 7, number 8, number 9 cloud companies, right? Maybe as current moment, they still want to compete. They want to get a market share, but it's harder for them to get market shares because you don't have this, like network effects that's acting beneficial to you. So that's what I think.
I sort of understand. So Boon Tee mentioned that they don't really need to win. As long as they are in the top, they're more or less guaranteed to win together.
I do have quite a few questions, but I think for the viewers' benefits, don't worry. These questions were asked to Boon Tee beforehand. So I think he will have great answers to many of the questions that we have moving on. But I think just an opening to really understand, can you succinctly, what's your investment thesis, maybe in 2 or 3 points on why you invested in Amazon in the first place, to have some context before I ask my question?
Yeah, I think when I've invested in Amazon's, right, back then and even now, it still come back to this theory called the aggregations. Is it aggregation theory? So what it means is that these companies, right, although on the surface Amazon is doing e-commerce, they are doing cloud, they're doing this and that, right? But what they are doing is actually they are setting a business such that they are front-facing the customer, and then on the back end, right, they go and source for whatever that's needed. Okay, so and this one is that there's a great power in that. Say for example, in their first business, which is the book businesses, right? In the past, if you want to buy a book, right, you go to bookstore. And all these bookstore, they are all selling books, right? So you can go to bookstore A or B or C or D, and there are long lists of different bookstores in the market. When Amazon come in, right, they just say, okay, I know that people's lazy to go bookstore to buy book. If they have a good buying experience over internet, they will just buy from the internet, right? So from that, right, they become suddenly they are sitting in between the consumer and also the publisher. So they are now in betweens, right? So by position them in between, right, actually they can do a lot of stuff. For example, as their sales become much like huge proportion of the market share, right, they can pressure the publisher to lower down the book prices. If you don't lower down, and then I will just funnel my consumer to some other alternatives, to another publishers. So they do this kind of things for many, many years already. They use the power to manipulate all those suppliers on the back end. So that's what they are doing. But one good thing is that they are treating their customers very good. That's why customers stick to their platforms. But on the back end, the publishers get like taken advantage of now. So book, right, is just one example. So you can actually look at the situations of the book business, right, and just extrapolate it to what happened to the e-commerce, right. So same thing again. They are in between. Whenever someone want to buy something, they sit in between. they all these customer interact with Amazon, and then Amazon go and procure whatever that's necessary. So on the back end, what they are doing is they get the goods that they want to sell. That's one. And then the logistic, they take care of that. They do a lot of like optimizations to help with that. Everything is just to provide the best customer experience to the customer. But in terms of their strength is that they always sit in between, right? So then come to the cloud business, it's the same thing again. Now, all these companies that say, okay, like I don't want to like maintain my own hardware. I just want to, like have a business that is like very light, not much hardware, just rent from Amazon. Like Netflix, and Netflix also is their customer. They don't maintain their own server. They just rent from Amazon. So now they are using all this hardware, and Amazon is the middle person again. On the back end, they still need to buy all these servers, right? Could be, from other companies, from NVIDIA or from Intel, AMD. They will buy those, but they will always sit in between. And I do see that this so-called, they are the intermediary, right? So they actually, they put themselves in a very powerful positions, and it is so powerful that they can actually get a lot of money out of that. But the money, they don't distribute out. They just reinvest and just keep on expanding. Now they have close to $500 billion of revenues per year, right? I think this is not by, it's not by lucky one. It's really a very long-term, there's a very long-term plan to just keep on executing the same thing again and again. So yeah, a bit long-winded answer.
No worries. So I wanted to take on this revenue idea, right? So actually, if you look at most of the top line revenue, you rank the companies by revenue, right? Usually they are retailers because it's just an accounting policy on the number of products that they move. But usually their margins are very low. Amazon, in this case, because of AWS, that's why they still have higher margin business, which is why when you take a weighted average, maybe the margins look slightly higher when you compare to like Walmart or Dollar Store General or all the normal retailers. But in this case, really, Amazon is not the one that moved the most product, at least on the worldwide platform. But yes, I do agree that they have a huge level of revenue. But I think I wanted to kind of circle back because you floated the discussion the other time we had. Because when we were talking about it, Amazon actually had a negative $20 billion free cash flow trailing 12 months when we had this discussion. And I was basically just asking you because I'm also a huge investor in another e-commerce business. And I understand the beauty of e-commerce platform, the prowess of their advertising platform and how much money they can earn. Specifically, so now I think in the recent quarter, you can see that e-com, advertising, services, all trending in the correct direction. They're all kind of recovering. You can see that, Amazon suddenly is waking up. That's what they say. Like it's the rest of the business is waking up. But then I think one of the core concern for many investors, later investors, by the way, not the early investors, because I have a gauge, or I have a feeling that a lot of the later investors invest in Amazon because of AWS. They say that they want to throw away the cloud, they want to throw away the e-commerce business, they want to throw away advertising. But actually, personally, for me, I invested because of the e-commerce business. But AWS was a kind of like a free gift. So for the e-commerce business, right? So I think for many newer investors in the cloud, now if you look at it, one part is doing very well, like e-com, ad services, they're all recovering. But then for cloud, everything is going down. I think in terms of margin, it's going down, growth is slowing down. You compare it to many of their competitors like Amazon Azure, Microsoft Azure, Google Cloud, everything is going down. So it's slightly disappointing. I think from a big bull, Amazon bull, from your perspective, do you have any expectations for the next 2 to 4 quarters? Or if they continue to underperform, like their competitors and margins continue to go down, is there any, will you be doing any positioning or rebalancing or stuff?
Yeah, I think worth to spend some time discuss about their cloud businesses over the recent 2 to 3 quarters, because like you said, right, the margins coming down slightly, but the growth actually like down a lot to now like 12%, right? So I think the management gives some explanation. They say that this is all because of the efficiency that their customers are cutting the usage. They want to make their workloads become more efficient. At the same time, they are adding more new customer and new customer bring in on new workloads. So it's like offsetting impact. The existing customer using less and less, the new customer bring in more. So you offset these two together, they get like 12% growth, right? But how much the existing customer can make their workload become efficient, I think there's a limit to it. So for now, maybe because of all these cost-cutting measures, they have to do more. But eventually, give it another 1 or 2 years, they after that, those that they can cut, they already cut, right? For sure, the trend will be going back up again, right? So that's the expectation that we can have. But at the same time, right, when I read this like transcript by the management, is that like Andy Jesse also mentioned a few times, right? He said this is 80 billions run rate business, talking about AWS here. So it's not as easy to grow at like, call it like 30 or 40% anymore. So just from the tone, right, I actually feel that we cannot like go back to 2 or 3 years back and say that, okay, this cloud is still like early, they're going to grow 30-40% for 5 to 10 years. I think this kind of expectations we need to tone down already, because even the management, right, they are hinting that actually when it comes to AWS, right, the size of the markets, right, may not be as high as what we expected just a couple of years back. Meaning that yes, they are still growing. Now because of efficiency things going, it's 12%. But when they re-accelerate again, right, I also doubt that they can go back to 30%. Like what Kelvin shows, right, the chart saying that the next 7 years will be 30%, right? I actually have some doubt on that now. I think they can go back to 20%, maybe 25%. But when you say 30% and for 7 years, that's the part that I have I'm a bit skeptical on that now, just because of all this like hint given by the management. Yeah.
But I think if you look at the grander scheme of things, right, when you compare, I think Kelvin shared a chart. I think Microsoft is a close second. I do agree that Amazon now at an $80 billion run rate, as you get bigger, it's harder to scale and grow. But if Microsoft at their current, I don't know what percentage, I think if you take a proxy, they're probably around 70 to 80% of AWS's current scale. If they're able to continuously pump 20 plus steadily, 20+%, while Amazon grows at 10, sooner or later AWS will be the first in cloud space. So do you have any concern when you look at it like the whole cloud industry together, like not only just AWS's scale? Because there's a reason if Microsoft can continue scaling and then AWS start to scale down slower.
Yeah, I think how I address this kind of fear is that I bet on 2 horses lah. So Microsoft also bet, Amazon also bet. Then for sure we'll win one, unless there's another 3rd or 4th one suddenly came out and then took over all these trees, right? Then I have a problem there. But back to your questions, right? I would say that I think we need to focus on what's their plan. Okay, so I do think that over the recent 2 quarters, there's this generative AI things that's coming, and then Microsoft, of course, with OpenAI, they have like so-called the first mover advantage in generative AI because of OpenAI things ongoing, right? So and Microsoft has been executing very, very good over the past quite like 1 to 2 years, 3 years, right? So that one have to give credit to Microsoft. But come back to AWS, right? It's like, okay, now with generative AI, what's their plan? Okay, what's the game plan there? And this one also, I found it quite interesting because I always say that, people thought that generative AI is like one distinct thing. Like it itself is like a business line. I based on my observations, it is not like that. It's just like a layer on top of everything. So say, for example, back to, let's say Google, right? Google is using generative AI to help them with their ads businesses. Then when it comes to Microsoft, they're using the generative AI on their productivity tool, on their Microsoft Windows, all these Excel, PowerPoint, and so on. Come to AWS, right? They also explained, Andy Jesse, he also said, right? He said this thing is going to be big, okay? How they're going to use it or how do they position themselves is that, companies, right? Any companies that want to do this generative AI, building chatbot or whatever, right? They will need some hardware, they will need some data, they will need all this, let's call it the ingredients, right? And if you look at all these ingredients, who are able to provide the platforms, the tools to all these startup to do all these works, right? Come back to AWS again. So they are the partners, right? They are not like, oh, I'm in this, I'm going to build my best chatbot and so on. No, their business is really to buy all this expensive hardware and then rent out, and that's how they keep the ROI high for their customer. They themselves is like asset heavy business, but they are fine. So at least that's how they position them. For AWS, I would say that as long as people are building stuff, they need hardware, they need data, and then they don't want to self-maintain all these servers, right? They are willing to pay a margin to AWS for this piece of business. So that's why I think Amazon, they are well positioned over the next like many years, just because of all these generative AI things. So for sure there will benefits, although they might not be the one that come up with another chatbot that's better than ChatGPT, right? So that's not my expectation. It's just that their business model, right, the core, right, still remain. I think that's most important.
Okay, I think then one side perspective. So I think share-based compensation is one very tricky issue for many of the tech companies. And despite them talking about like cutting costs, and you see that actually employee counts, head counts are going down. Like it shows in the numbers in terms of their operating income going up as well, trending in the right direction. But then there is a hidden tax on shareholders if they continue printing shares. And it looks like the share-based compensation is coming back to haunt people again. Now I think it's up 37% year on year. Do you have any, are you keeping a pulse on the outstanding shares and how they compensate executives?
Actually, no, because when we look at the operating incomes, right, they already deducted all this. They deducted the share-based compensation already. As you look at the GAAP earnings, right, all deducted. So we don't have to double count that. I think we should pay a lot more attention to stock-based compensations if you are reading the non-GAAP numbers. Because the non-GAAP numbers, right, this is the numbers that they say, oh, actually we are profitable because our employees, they don't receive cash, they receive shares options, right? So that's why we are profitable. If you adopt that kind of view, then SBC, the stock-based compensation is something that you need to pay attention to. But if you already look at the GAAP accounting numbers, right, the operating incomes, right, it has been deducted. So I don't think we need to double count that now. And another thing, I will say that for these tech companies, right, people that are building AWS or even e-commerce, right? So these are not easy things to do. This is like ecosystems, right? They are coming up with all sorts of interesting innovations, right? You need to attract the best talents to build all these things, and you cannot expect to like pay a few $100,000s and expect that people will just willingly spend their time and work for you for years and years, because they can always go out and build their own businesses, right? So you really need to give a stake to them so that they build their business on the companies, right, or on AWS or on Amazon's, right? So I think when it comes to stock-based compensations, especially in the context of US tech company scenes, right, it's very hard to avoid. Really, I mean, this is something that you just treat it like, okay, these are our partners. I'm the shareholders. I contribute the monies. All these talents, they are contributing their time, and then we all together make the company successful, and then we all share the payoffs. I think that's how I view it. I'm not that particular in terms of the numbers, share-based compensations, unless it's really so big that it will, like make the operating incomes become, bad numbers. To me, just focus on the operating income is good enough.
I think last question for many people that are interested. Amazon at 140 can still buy?
Oh, this one I can contribute a bit. Yeah. No lah. So 2020 it went up, went sideways. Then interest rate went up. Amazon sort of came back to reality lah. But because of this whole interest rate peaking thing, Amazon has been back on a bull run. So they are right now in the trend in this upward trend. So this is the first thing. The second thing, I add in the EMA, exponential moving average. The golden cross has happened, so Amazon is clearly right now in the bull trend. Then throw in this Bollinger Band. It's getting messy. The Bollinger Band. Amazon. Let me just delete this first. Amazon. It has broke out of the Bollinger Band, so expect a bit of very short term, very short term sell-off until the band catches up. Then throw in one more RSI, relative strength index. Amazon is still not yet overbought, so this trend can continue to go up a lot longer. Because first thing, Amazon, they give very strong guidance, so this trend will keep going on. I don't expect this trend to stop anytime soon. So recession is cancelled, boys. So that's my technical analysis part.
Hey, so can buy now.
Short term, mid-term, yes. Short term, I'm not that optimistic. Short term meaning like 1, 2, 3 weeks. But anything can happen. It's already in a bull market. You if you don't buy, you might be missing out lah. Not financial advice, by the way.
I think just now, before we kick off the recording, I think Kelvin also asked, right? Given that Amazon, if you look at the past 12 months, is negative free cash flow, how can we do DCF, right? So I do agree with what Keng shared earlier, is that for Amazon, it's very hard to do DCF. This company cannot. You have to do a simpler approach when it comes to valuations. Free cash flow is just too volatile. So here, right, focus on this segment here. I think for Amazon, you really need to break up the two core businesses, the retail and AWS. So this is their revenue. This is the past 12 months operating income. And then this is their operating margin. This is their growth rate. So I would say it's very hard if you look at this kind of numbers, right? Very hard for us to justify the valuations because we are still in the midst of these adjustments. Like I mentioned earlier, right? Their logistics over expanded and now they are in the right sizing, right? But we can see that just looking at the business, right, we can put in our own assumptions and having that assumptions will help us form valuations that we think reasonable for Amazon. So what I did here is very simple calculations. So I include in the margin, the operating margin that I think is sensible. So for AWS, I put 25%. And then for their e-commerce business, I put it as 8%. 8% is higher than typical retail business because they have quite a strong advertising arm there. So that's why I put slightly higher there. And then in terms of their growth, I think that they can go back up to 20%, but maybe not to the extent of 30 to 40%. So I think it's very hard, as I mentioned earlier. Growth for e-commerce, I think is 15%. PEG, I just put in some numbers that I think is reasonable. And from the PEG, right, we can calculate what's the reasonable PE. And from the PE, we can also work backwards to calculate what should be the sensible price over sales for the business. So I think this is, don't treat this like the right numbers because this is just my own opinion based on their growth, based on their margin, based on what I think is a suitable PG. I just work backward and see, okay, maybe for AWS, they can command a price over sales of 7.5. And I just put in like Tesla is 9.4, right? Although they are very different. If you compare Tesla versus AWS business, Tesla growth is much higher, but AWS margin is much higher. So they kind of like each have their own strength. But price over sales, I give them like 7.5 here. And then back to the retail, I think they are about 1.4. So why 1.4? Also because of their margin and also because of the PE that I assigned here. So if you use the price over sales here and just multiply with their past 12 months numbers, right? I think their valuations, right, is about quite like $1.3 trillion, which is actually lower than their current valuations, which is 1.43 trillion. These numbers, right, if you ask me, let's call it let's say 2 to 3 quarters ago, actually I assigned a much lower numbers for retail, but much higher numbers for AWS. Why AWS number came down mainly is because of their growth, slowdown in the growth. 12% compared to just 6 months ago was 20%, right? It's still a huge slowdown, right? So I need to take that into considerations. Of course, as we follow their business, if the generative AI side really has good traction and then they are able to, revive their growth, of course, all these assumptions we can change again, right? But for now, looking at 12%, I don't know what's going to be over the next quarter. Let's say call it like 10% or 8% over the next 1 or 2 quarters. Can I still say that 8% is still a high growth business and hence their PE should be 70, 100? I don't think so, right? Sometimes we need to take into account what's the latest information that's available to us, which is for now you can see that there's a clear slowdown in AWS, right? Going zigzagging up down, but now it's really at 12%. So I need to take that into considerations. So in terms of their valuation, I would say they are about the same between the e-commerce business versus AWS. But for now, I would say that they are close to fairly value. I wouldn't say I'm not formal into these companies now. I need to look at how they revive the growth in AWS space now. Like 6 months ago when we talk about retail, right? I have much higher confidence that the margins of the retail business can come back because it's talking about cost cutting, and to me, cost cutting is something that within their control. which they did, right? Which is that they lay off their employees, downsizing their fulfillment center and so on. But when it comes to reviving growth, this is the part that I think is more uncertain as compared to the previous one. That's why I toned down my expectation a bit. Yeah.
Okay, thanks. That's why investing is not easy. I will presume that valuations will always change after every quarter because you get new information. I just wanted to get Boon Tee's quick opinion on, do you have a rough idea or picture on what is Amazon's real free cash flow generative ability? Like you can give a range in terms of how much free cash flow they can generate.
Yeah, I don't have a numbers on that because it's always very hard. That at each period that we're looking at, right, they are onto something. And that something is something that we can't see like how much the detailed numbers is, right? And it's always a mix of different things. For example, now, if you look at the free cash flow might be, it's very low because of the spending in, CapEx for all this generative AI stuff. Maybe some time ago is when they spend on streaming businesses. And some time ago is because they're acquiring their, pharmaceutical companies or whatever, right? Pharmacy companies. So there are a lot of things that's happening. That's why I think that it's very hard for me to come up with numbers. So I'll keep it simple. Just look at the operating income and then just look at their operating margin. At least this is something that we're able to interpret. Although this is like very high level sense and not like a very precise kind of modeling and results. To me, if I get into more details, right, although sometimes like more details meaning that we know more about the companies, right, sometimes I will get myself lost in all these details. I'd rather like zoom out and then just focus on what are the big picture and positions it according to their how to say, their strategies rather than focus on every details, like especially coming to like numbers. Yeah.
I think if I'm going to use a normal way where people keep talking about DCF, right, to get a yield, right? So assuming that now I think most big tech companies are trading around a 2 to 3% free cash flow yield. I think these are off the top of my head. Don't crucify me if I'm wrong. But if you take 1.4 trillion and then you divide it by to get a 3% yield, that's around a $40 to $50 billion free cash flow yield. So then you make the assessment, if assuming that Amazon is able to hold that kind of valuation metric, do you think in a good year, if they cut back every single thing they do and they really just go focus on generating free cash flow, do you think they can pump out $40 to $50 billion that trailing 12 month? So now the numbers look a bit skewed, but I think to get a better proximate, you can kind of go back to when they haven't started this reinvestment cycle and see what are the numbers then. And then from there, you kind of push out a growth rate and see whether they are able to deliver. So yeah, I'm also not going to say whether it's a buy or sell. I started a position. I haven't been adding, but yeah, that's my perspective. So hope you guys enjoyed the discussion on Amazon and we'll see you guys in the next video. Goodbye.